Of the London Session Open. Today is August 27th, 2019, and it's 9:38 a.m. in London when we're doing this market update. And we're doing this live from the ATFX offices in central London, just next to the Bank of England, if you are ever around and want to know more about ATFX and their services. Uh, yeah, we're going to talk markets. It's been quite an interesting last few days. Friday was amazing with declining stock markets, uh, comment by Donald Trump telling American companies to sort of find alternatives to China. Then before the end of the, just after the close, new tariffs to introduced in the U.S. from September 1st, and obviously I forgot, China introduced tariffs on imports to the U.S. Sorry, from U.S. to China. So it's not really working out, this trade war thing, and it looks like both China and U.S. are in it for the long haul. The only problem with that, though, is of course that will affect everybody else and use risk appetite for investing in general. So, stock market is very volatile, and I think things like the dollar versus the Japanese yen, we had a very high success here, a very good success. As you might remember, on last week, pretty much said that people were probably going to look to sell on this little space up here. And I've actually been insisting on that for quite some time. I don't remember the exact levels, but it was something like this. And the market eventually traded on lower. Obviously, we're dealing with just we're just one tweet away from sort of profit and loss most of the time. Sort of depending on the actual entry, then anyway. So we're looking at maybe 2 times, if not up to 3.68 times the reward ratio, because we said look to sell here. If you would have kept it all the way down to the downside, we were just looking for something like this. Now, looking at this today, think about this realistically. PMI figures from the US on Friday I think it was Thursday last week. They're not good. They're bad. US economy is slowing down. Germany's in a contraction. The IFO figures published yesterday, they're not really good either, right? So you had PMI figures from the US not doing good. You had IFO numbers from Europe not good. You have a contraction in Germany. You have a contraction in the UK. We have Brexit literally just around the corner. And then we have even slowdown in China. So it's not looking very, very good. So I think in general, we're going to be trading down lower in sort of risky assets like, say, S&P, or maybe the yen pairs, as I've been mentioning for quite some time. Now, the idea here, I think technically, is really straightforward. The trend remains bearish with 106.99 or 107 to be exact. And yesterday we had that strong move to the upside, but the market rolled over. And I think as long as you do trade below 107, then there's absolutely no reason to make any changes to the outlook here. I will remain bearish below this high. GBP versus the USD is a bit different. So you might remember, or you probably read the news. So obviously, not president, PM, Prime Minister Boris Johnson from the UK visited Germany, France, and Macron and Angela Merkel look ready to potentially, finding some alternative deal. And there's a lot of reason maybe for doing this. Obviously, it's rather unrealistic that they'll find something. Well, hopefully, we'll find something. I say hopefully because I am based in the UK and I really want to see some sort of smooth transition, if possible. And what can I say? Let's see what happens. Obviously, it's not too many days left. It could just be sort of last final attempt, and it's also a way for the EU to sort of say, look, we gave them a chance, we gave them a few years, whatnot, and it didn't work out. Because as I said already last week, at least in the UK media, EU is being viewed as a culprit because they don't want to sort of give the deal that the UK would like to have. But now they're sort of handing out this opportunity to, not handing out, but giving the Boris Johnson opportunity to maybe find some different deal, and we'll see what that happens. As well, from the US, talking about quick trade deals that could potentially help and get things going, and that could also be beneficial, definitely beneficial. US is much closer to the UK than, for example, trading with other countries. Growing economies like India and China and these places which are further away. So, uh, you know, geographical proximity is always important. As a consequence, and just for general optimism, but as well because I think technicals, as you know, the market was rather oversold. And what I said is that what can't go down, we should try to go up. And at one point here, the market did take out the high here at 127, 121.75. Now I said focus on 122.10. So we took out that level, market went up and then down and then upwards again. Now the market is stabilizing here, and if you take Fibonacci, I need to update this one like that. From the low to the high, you can see that around the first fib, people are happy to buy. And I'm gonna insist on that this is probably a little spot where people want to buy, because again, this is the interesting area. This is from here the market turned bullish. So if we trade above it, we should technically be fine. Now my trend defining level is a 21.05 level, so I'll be bullish about this level. And if we go down a bit, I think people are gonna buy, and I think we could still reach that take profit level pretty much at 123.60. And then from those levels, those high levels, I think, unless we get some reassuring comments from both the EU and UK, I think if anything, you know, maybe we'll move worst case more 124, 124, say 124, 125 in worst case. But I think from these levels, people kind of be quite ready to sell, because realistically, it will still be a bit of a challenge for the UK economy to adjust to the new reality. Let's move along here. Let's take a look at Brent crude, or this is actually US oil. So this is what we call West Texas. Here, still leading within a range. There's not too much to do, and we're just dealing with this massive triangle type of pattern. Nice double bottom at 50, 58. Take that out, will probably trade much lower. Here's Brent crude, and this is you know, a nice little setup. You know, took out this low here and this low here. So the market moved down, then went up, because I think we talked about this one here, and then went down again and up again. So here you can see we have a significant amount of sell orders right now, and I think realistically we're not going to trade above 61.59 anytime soon. I think we can pull this down eventually down to this high, and that will reduce the risk significantly. Now, we can only probably do that when the market is down here again at 57 or so, because right now it could swing upwards. This little spot here, I think we can adjust this a little bit lower as well to the 50% level, and that's the 50% correction from this decline from here, from July 31st to the bottoming out here on August 7th. Gold prices. So this is gold prices, and it actually worked out rather good if you did buy with the short-term setup. Of course, you had a great help by President Trump, and the idea here was quite straightforward. You know, you could buy here if you wanted to. We reached this level already on August 19th, if I remember correctly. I mean, I can see we reached these levels, but I think I had plotted these ones. So August 19th, August 21st, August 22nd, and then August 23rd. I definitely remember this. I think this one as well. And the idea here was rather straightforward. This is a short-term level, and if you believe that, you know, things would now turn out good, and you were really bullish on gold, then that would be the opportunity to buy. If you were more conservative, like I am, looking for a stronger pullback, you would wait for a decline from low levels, and that's what I was waiting for. But it proved that the first setup was the correct one, and from the very low, from this level here to the high, if one would have kept this whole session, you would have been out for a 3.5 times risk reward ratio. If you will get out now, you get out at a very, very good 2 times risk reward ratio. Going forward, it's quite clear that this is sort of a well-defined level, a level that is important for people. And in the short term now, I will continue to be bullish about the August 13th low. And the new level where I would focus from is here. So I would focus on a correction. So I took fib from this low to this high, and that would be slightly more than a 50% correction between the 50% and 61.8% correction levels. So I would be bullish from these levels if you're trading in the short term. Now, important to remember, you don't always have to trade. I mean, this is an excellent opportunity to sort of trade something like risk off. But there's other things as well that are interesting. And I am short copper myself. And copper is another little good market really to trade risk on, risk off. It reacted nicely already last summer when tariffs were introduced. And if you didn't catch the move in sort of Chinese stock markets like the Hong Kong and the China A50, then something like the copper prices were actually really good. And I did a little update on that one on August 27th, and I'm sticking by this longer term view. So here are copper prices. You can see here that, yeah, your right shoulder, sorry, it should be right shoulder, sorry, left shoulder, right shoulder. Yeah, the head. This is the weekly chart. So we took out this level. Um, this is that take profit on that big pattern is 182. So that's silly low levels. And then you have a smaller left, right, and sorry. I just no, this is actually left, right, and head. It's just that I'm using just one for the one, and that gives you a target of decline of 13.45%, decline of 2.24. I traded this section here last summer on the breakthrough downside. This section here. So and at that time, like 13% decline. I said, that's a bit exaggerated, right? But so I traded just this section here. But look and behold, I think about a month or 2 months later, back at these levels, and I think this can continue to trade down. So I'm going to stick with this one. And this is an alternative where the risk reward ratio make perfect sense. Whereas in gold, it already moved ahead. Because at the end of the day, you look at your trends, you look at the breakouts, you look at what's going on in the world, and then when you compare one setup with another, a good thing to do is to look at the risk reward ratio. And if you're not confident, you can short a bit on one and short a bit on the other one. And that's why I didn't trade gold. But this one makes sense, and we're obviously traded to a new low. But if you're in scalping mode and you want to be shorting something relatively straightforward, well, actually nothing is straightforward nowadays, then this could be something. S&P 500. This is the S&P, and you probably would have needed to be quite brave to buy here on Friday. So the market actually slid, as you might remember, and the idea was just to, be bullish at these levels. And you can see how the price bounced, right? And then, we gapped lower on the opening here, and the market sort of went even lower. Now, technically, it's fine, we're in an uptrend. I think, though, the next time, and if we trade below 28,040.04, I think the market will move lower. Now, the reason was I brave here, because you get all this negative news coming out. So I will give you the levels, right? And I do the levels. I do it for myself in the morning, right? This whole thing, by the way, looking at all these charts, I did this way before I even started to work professionally as an analyst. In 2006, I started to trade for myself, and I did all this daily analysis. I was doing it back then, and then I was just waiting for the price to reach the different zones, and then I would pull the trigger. And that's what I'm giving you. I'm giving you the different zones, the different levels that matter. But of course, when you have things coming out on the wire like they did on Friday, you need to be very careful and sort of probably I would not have been buying here and because of that. But obviously that's what say you probably need to be brave. Now, going forward here, if you believe in a good ending, a happy ending for the world, and you think that U.S. and Chinese government are going to be able to figure things out quickly, or you think economic data will improve, then you'll remain long here. If you think, for example, that the Fed will cut interest rates and all of that, then you will remain long. On the other hand, if you're much more cautious, much more bearish, then I would just book profits if you did buy here, and I would wait and see what would happen. I think the next time we trade below, which is you got one low here from August 15th. This is the weekly low, the current weekly low, and then you have this level here, which is from August 6th. I think the next time we trade below this level, we're probably going to have this sort of reaction. Now, this is the German DAX. Now, the German DAX as well, we sort of saved by a tweet, kind of. The day was to sell up here. We reached a sell zone already on August 19th. But it was first on August 23rd that this position started to make money, decline like that. Worked out rather good. Now we're pretty much back up at the sell zone again. I think we grazed it, but you can see here we never really actually managed to reach it again. And I was going a bit lower. Now, stock markets will sometimes move ahead of economic data. What does that mean? Well, this is Germany's 30 biggest companies. So you have insiders. I'm not saying they're trading with insider news, but you have insiders, people that really know these companies, people that analyze these companies, people who have a nice gut feeling and all of that. And what happens is that when they think the German economy is going to bottom out, then they buy stocks because it could be oversold, or they know someone, or they work at the plant or whatever, and somehow gets clues of that things are busy when they need to hire new people, whatnot. And maybe that is what's happening here. I'm not sure. I can tell you that from a 6-hour perspective, it's quite interesting to see inverse head and shoulders. You get yourself a head, left, and a right shoulder. So obviously, if we take out this level here, we could actually rally about 4% or 500 points up to this level, according to that head and shoulders pattern. So that's something to pay attention to. But then you need to sort of add things up, like all the other stuff, like what's happening, in the U.S.-China trade wars and all of that. And from that perspective, I don't agree being long here. But technically, we break this, we're probably going upwards. So what's the outlook for today then? Well, I'm just going to continue to be bearish, and I think we can rather relatively easy revisit these lows and then probably trade lower eventually. Okay, I think we covered pretty much all the main markets. Let's see if you guys have any questions for me. And we're a simple good morning. Good morning, Nikos. I hope you're doing good. I received your email, talk with David actually today, and they're going to come back to you about the issues you had with the Swedish kroner. And we have Marvin here. Good morning. I hope you had a good bank holiday weekend. Yeah, I had a very nice time off, relaxed with my family, been to the park and stuff like that. If you guys didn't know, I have a little boy at home. He's 1.5 years in 16 days. So yeah, we're spending a lot of time with him. And obviously looking a bit at the markets, but it's nice, just close down the markets. That's the beauty of trading financial markets. People actually close down over the weekend. The crypto traders, obviously, it could be a benefit trading. It's always nice to trade the markets when they're going up, but when they're not going up, or you're in the wrong position, and it's open over the weekends, you never get any break. But yeah. Okay, good. If you're new to this, by the way, there's nothing wrong subscribing to the channel. So we're doing this via the ATFX YouTube channel. The website itself is called Investing Cube, but it's very straightforward. I'm just going to show you here. If you want to subscribe to something, like this is BBC Radio 1, and there's a little subscribe button like that, and then it has the little bell button, which is up here. Actually, you can't even see that. Let me show you how that looks like. There we go. So you have that little red button here. Just go to the page you like, and then you click on, if you receive this, you subscribe, and it will land on your feed, whatnot. And if you click on that one, you receive as well notifications. There are different ways, like you get a bunch of emails, but you can disable that. That's what I did. And then on this little bell button, sort of you get comments and stuff. It will usually show there. And it's free to subscribe, and you get all the notifications. Okay. As well as guys, we are on Telegram. So if you want access to all of our content, then that's Telegram. And you get the same via Twitter as well. You can connect everything via Twitter. You get notifications and stuff. So you have these two channels. If you want to reach out to me, then my Twitter is AlexFX00. So you want to keep track of what I'm up to. We have it here. As well, before I forget now, I was going to say something. Yeah, I can't actually remember right now what I was going to say. Well, then we're gonna just wrap things up. Guys, if you have, and yes, I remember now. So obviously this is the bank holiday weekend, a week, so it's just slightly shorter, slightly quieter during the week. There's not a lot of people in town in general because people are off, and we're gonna do the morning update tomorrow, Wednesday, and on Thursday. But on Friday, I'm actually off, and then I'm back on Monday. So on Friday, there's not gonna be a market update here because I'm gonna be off that day, and then I'm back on Monday. All right, guys, have a great day. If you have any questions to me, you got all these different channels here. Obviously, you reach out to mine. I don't actually watch the Twitter too much. You can also via the Telegram. I think if you write back to me, actually, I'm not even sure it's possible. So let's just use Twitter. That's probably the best opportunity or best. That's the way you can actually reach out to me. All right, guys, have a great day, and thanks so much for watching. And don't forget to like the video. See you guys. Bye.